This company should be bankrupt. $32 million in the first 6 months of 2020. This is a billion-dollar company. CEO purchased 16 million shares from Lowe's. This amount is being excluded from the 2019 summary compensation table. Why would you exclude that? They're not breaking it out. They're not being transparent. Big red flag. I don't even know which company I despise more, Wish or Porch. I've been looking into this company, Porch. They just IPO'd. SPAC IPO, raising $322 million. This is a Handy competitor, an Angie's List competitor. Angie's List owns Home Advisor, Angie's List, and Handy. All kind of controlled by IAC, Barry Diller, Expedia, Match Group. Guy gets marketplaces, right? Know the Handy guys, full disclosure. Oshin blurbed the back of our book. Oshin is now Chief Product Officer at Angie's List and was co-founder and CEO of Handy. Handy was always way bigger than Porch. And, I was seeing Porch from afar. What was interesting about Porch is they have always had this really early partnership with Lowe's, the Home Depot competitor, big home improvement retailer, massive company. Let's talk about Porch's fundraising history, okay? Lowe's led their Series A. Actually, took the whole thing. So that was 27, 28. Then they raised another $65 million in early 2015. Which I guess valued the company at $500 million. At that time, they said they had 350 employees. It's a marketplace to connect handymen and, different kind of home improvement contractors with customers, right? So the Lowe's partnership makes a lot of sense. So Lowe's was saying, hey, we're going to come in on this. They reinvested in the $65 million round. Lowe's is saying, hey, we can refer people to use Porch. I'm sure they could get some kind of revenue share on that, right? I mean, it's kind of like IKEA buying TaskRabbit, but TaskRabbit was really suffering. You're a retailer. People need labor and services done to use the products that you're selling. Great. How can we have a partner? Strategically, it makes a lot of sense, right? Big nut to lead that $26 million round. That was kind of, a little peculiar, but okay, whatever. Then they stay involved in the subsequent round, the $65 million round. So that was all 2015. They don't raise equity. At that point with that $65 million, they had a post-money valuation of looks like $500 million, right? Then they raised debt in 2017. They raised all this money back in 2015, and then they didn't really raise any other money. Then in 2019, if you read through their documents here, by the way, are very slim on information. You just look for Lowe's. During 2019, Porch did not grant any equity awards to Mr. Ehrlichman. That's the CEO, co-founder. In May of 2019, Matt, CEO, purchased 16 million shares of Porch from Lowe's at a price of 25 cents per share, which was lower than their most recent 409A. 409A is like a fair market valuation that you get when you want to value options in your shares, right? So they got this valuation, which I think was bringing in their valuation at like $2 a share was what, the 409A firm, they do these valuations for a living. That's literally what they do. Valued them at roughly $2 a share. The CEO buys it from Lowe's at 1/8 of that. And Lowe's in the Series A got around a little over 17 million shares. Okay. Series A. They did the whole nut. They took the whole thing. That was September of 2014. They raised $28 million at what is apparently under $100 million valuation. Okay. So Lowe's got, let's say, a third of the company, roughly, in ownership. 17 million, a little over 17 million shares. Now, Porch raises $65 million at about a $500 million valuation. 5 months later, in January of 2015. What? let's say Lowe's has 20 million shares, let's just say. Right? They sell 16 million of them to Matt for like $4 million in change. Okay. This is what Apple got in trouble for like 10 years ago. You can't sell shares at under fair market value. That, you're actually, someone's got to pay for that value. So then Porch was required to recognize a compensation expense in the aggregate amount of $33 million with respect to Mr. Ehrlichman, our CEO's share purchase from Lowe's. This amount is being excluded from the 2019 summary compensation table. Why would you exclude that? You don't think Porch knew what was going on with this? You had, easily their largest investor, Lowe's, selling, call it 4/5 of their stock to the CEO at easily 1/8 or possibly less of the fair market value. And by the way, these valuations, these 409As, I mean, it's, hey, I think the company is worth this. There's analysis done, but it's whatever the 409A is, the actual value, like whatever you would be getting on the market, it's going to be more. Right? The whole idea is that you can issue it to your employees and use share price and this kind of stuff. And so it's not a truly vetted valuation, right? There's a lot of ambiguity that goes into that. So the point is, this guy is buying them at let's say 1/8 of what the 409A is, right? And if the 409A is undervalued, and the 409A should be $4 a share, and the guy's buying them at 25 cents a share, what is going on, right? It's very weird. 16 million shares. They go on to talk about what this chief revenue officer is, right? This Matthew Neagle guy, what he's getting, right? And it's like 80,000 shares, 100,000 shares. This guy bought 16 million shares at dirt cheap price. Then he takes the company public basically a year later through a SPAC. Now, those 16 million shares, which he bought, he has other stock issuances, and then, he has probably, like here, you can see his, his other vesting, 600,000 shares, 3 million shares. Like, did Lowe's just write this thing off and say, yeah, that we think this business is done? Why would Lowe's do that, right? Lowe's saying, yeah, we want out of this. Give us our $4 million. We're gonna take a $25 million write-off for this thing. Okay, sure. It's Lowe's. They're massive. This is like a rounding error to them. But okay, yeah, we'll take the $4 million. We'll hold on to 1/5 of our position in the business, and yada yada yada. Okay. Now, what is Porch stock price? Basically, came out at around $15 a share. You want to know the math? You want to know the math on that? 15 times 16 million. $15 a share. 16 million shares. The guy bought $4 million. Is $240 million. Interesting. Okay. Well, is the business doing well? That's, right? Has Matt built a great business? Okay. Let's look at a comparable called Angie's List. Angie stock, $13.50, $6.5 billion market cap. Call it $1.5 billion revenue. What is that in GMV? Marketplace again, GMV. This guy is saying Angie's List will do around $46 billion in requested GMV, right? So, hey, I need this thing serviced, or hey, I need this job done. Serviced, so the actual GMV performed $28 billion, right? Of that, saying 5% overall take rate is, how they get to $1.5 billion in revenue. The move with Handy, I thought there's a great acquisition of Handy. Handy, would say, hey, you want your house cleaned? It's going to be, it's commoditized service. We go very deep into the idea of commoditized and uncommoditized services in the book, right? Uber, commoditized service marketplace. Handy, commoditized service marketplace. Home Advisor, Angie's List, non-commoditized service marketplace. What does that mean? Doesn't mean that the business is commoditized or not. What it means is that the service being exchanged is commoditized. So Airbnb, non-commoditized, right? I have a house that could have hundreds of different features or attributes that would determine the value of that service, right? Or that experience, or that house. Not commoditized. When you have a service that is, has only a handful of real attributes that determine the value of that service, you can start to think about the services being, and this applies for product marketplaces too, by the way. Just think new versus used product marketplaces where, how do you set the price of a used product? Is the platform setting the price or is the producer setting the price? That's kind of the main thing here. Angie's List and Home Advisor, the producer sets the price. TaskRabbit's big problem was that they would let, for home cleaning services, which are commoditized, they would let the home cleaner set the price. So now you're looking at like, oh, well, this person's $20 an hour. This person's 15. Let me go read their reviews. What star rating do they have? No one wants to do that. It's a pain, right? The platform, if you're facilitating a service or a product which is commoditized, you should take that friction out of the transaction and fix the price. The platform should be the price setter because you're going to reduce friction. That's actually what this guy's slides are saying here. There's $18 billion in requested GMV that isn't serviced. This slack is expected to be reduced due to fixed price services, right? You can reduce friction by fixing the price because what you're going to say to the customer is, hey, $30 an hour, you're going to get your home cleaned. I'm going to match you to a producer, to a 1099, home cleaner, but the platform, are going to ensure that home cleaner does a great job, right? We are going to extract away all that analysis of saying, well, $20, $15, how many star reviews, who had better reviews? No one wants to do that. Just, I want to book it and who wants to come clean it? And the platform should facilitate that. The platform should obfuscate all of that friction away from the consumer and you're going to get more transactions. So you can't do that with every type of model because, right, you could have some services that you can't treat as a commoditized service. But, you do have a bunch that you can, right? That's where Handy really shined. And part of the acquisition here. And now Oshin is chief product officer at Angie's List, right? Looking across all the businesses and trying to bring these fixed pricing models into the rest of what Angie's List and Home Advisor is doing. Great strategy. Okay. What's Porch doing? $28 billion. Serviced across Angie's List, Home Advisor, and Handy. Well, Porch's stock price puts it at $1.25 billion, basically a fifth of Angie's List. So how much GMV is Porch doing? How much revenue is Porch doing? Great question. We don't know GMV. Big red flag. Like Lyft not telling me GMV. Big red flag. Lots of ways you can manipulate revenue numbers. Their reporting is super wonky. Look at this number. Okay, usually on these financials, it says numbers are in thousands, right? So when I'm looking at this, I know you got to add 3 more zeros on. Okay. That annotation isn't on these slides. They had $900,000 in cash at the end of September 2020. What kind of joke company is this? You have $900,000 in cash? You're supposed to be having $1 billion market cap? Doesn't make any sense. Okay. And by the way, in this document, this is their 10Q. They don't even list revenue. It's not even on here. Revenue is not even in this document. Okay. You got to go to this other document, which, by the way, I couldn't even find on Porch's website. Found it from another article, which was talking about Porch. This is their S4. This document says that they have $77.5 million in revenue for 2019. The whole year, $76 million in revenue. $32 million in the first 6 months of 2020. This is a $1 billion company. Come on, gang. If you're doing $100 million in revenue and you're growing at like 2-3x a year, Roblox, anyone? Roblox? DoorDash 3Xing. Don't know if it's sustainable, but 3Xing. These guys went from 54 million in revenue to 77 from 2018 to 2019. Okay, 50% growth, sure. 2020, they're actually down compared to the same period prior year. We don't know where they'll come out in the last 6 months here, but I do know they had $900,000 in cash at the end of September. I mean, what are these numbers? And by the way, it's not like all this revenue is GMV. They don't mention anything about GMV. They've acquired a bunch of different companies, by the way, along the way. Like they acquired a moving company. Okay, they do moves. A lot of this revenue, I think, is actually not take rate revenue. I actually think a lot of this revenue is full rack rate price for the service. So when you look at these total costs and expenses, I mean, look at this. On $32 million in revenue, first 6 months of 2020, they're losing $24 million. They have $50 million in costs for $32 million of expenses. It's bonkers. It just doesn't add up. And I mean, look at their interest expense. They're paying $6 million in interest expense on $32 million of revenue. This company should be bankrupt. That's probably why I'm guessing Lowe sold their shares off in a fire sale to this guy, Matt, and then somehow a SPAC to give him $322 million on a company that hasn't broken $100 million in revenue, and best case scenario is growing at 50% year over year revenue. And by the way, it's not like they have $500 million in GMV. It's not like this $77 million in revenue is, a 10 or 15% take rate or 5% take rate, which Angie's List have. It's much lower because they have that non-commoditized model. It's not like $77 million is 10% of a $700 million GMV. That's not what's going on with this company. I think they got a lot of linear revenue in here, right? Where I'm paying $100 for the job and I'm paying the contractor $80 and I'm making my margin, but they're booking that $100 as revenue. They don't clearly break that out, but you kind of need to read between the lines, look at their acquisitions and have a level of familiarity for how the company runs. This isn't all GMV. If it was GMV, and if they did have $500 million in GMV, I guarantee you they'd be talking about it. They don't have $500 million in GMV. They're not breaking it out. They're not being transparent. Big red flag. They don't. It doesn't add up. Doesn't add up. I would not touch this company. I don't even know which company I despise more, Wish or Porch. It's close. It's close. I don't know. I would not touch either of these companies. Oh my God. I mean, the CEO is now making $200 million in a year because he's buying out Lowe. It stinks. It stinks so. There's so much funny business and so much lack of transparency. I can see why Porch took the SPAC. Yikes. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.